Wall Street has seen its best quarter in gains since 2022. What does this mean? Hey, everybody, welcome back to another beautiful day in real estate. Today, we're going to dive into a little bit on the US economy and the stock market, what's going on with the war in Iran and negotiations, and also a little bit about the bond market. But without further ado, let's jump into the oil pricings right away this morning because this is pretty significant. And we have been paying very close attention to this, and it's starting to showcase that we're pretty close to accurate where we need to be. So my kid's behind me again. So if you see me looking, that's definitely why. But first off, let's talk about Brent crude oil. Brent yesterday was very well. Let's just say that it's still not looking great. It could be getting closer to a bottom. I am anticipating again that $72 a barrel. It might break below. I mean, there is possibilities of it kind of going below and hitting that 70 to 69 range. My, I'm going to say my best guess is we're going to end up in that pocket before the end of this next week. Moving into the 4th of July weekend, I don't think we're going to see a lot changing here, but more than likely we're going to see that bounce right around there. The reason is because on the stochastic, we saw the higher high, the lower high, and then it started to push up again with even a lower high. So the momentum is very, very slow moving. And then on the RSI, it just looks absolutely obliterated. But that don't let that fool you. When you see things oversold like this, to that extent, typically that means there's a bounce incoming, right? It means we're close to a bottom usually. We'll see as the changes happen over the next couple of weeks. But right now, it sounds like the negotiations for the war in Iran haven't really progressed very well. And we'll dive into that in just a second. But same thing with WTI crude oil. I still think that 69 to 67 bucks a barrel is going to be closer to that bottom. Same concept we saw here, lower highs all the way down, tried to make a next move up, lost it, and now we're starting to go down this morning as the market opened about 20 minutes ago. So you can kind of tell that this bottom's starting to form because you're seeing longer tails at the bottom and you're seeing sorry about that. You're seeing longer tails at the bottom before it's trying to make its next move up. So with that being said, more than likely, we're going to see it drop a little bit more. We might see something over the 4th of July weekend saying that the negotiations falling apart in Iran and then the market's going to pump. But more stuff that we should be paying attention to currently is the S&P 500. And the reason is because the S&P is what's really just holding up the economy currently. So currently, we've been following this trend, this channel all the way back to 2009. And the only times we've seen breaks above or below was the peak of the bull market here in 2021, and then also the break below, which was COVID. And then outside of that, we've been pretty significantly steady since the end of 2009. Slight breaks above, but mainly bouncing off that channel and coming back in, right? So with that being said, you can tell that the bottom of 2009 was right here. But we broke above this humongous channel for the first time in almost, 4 years, 5 years. And we are starting to find a little bit of stability above that, right? So my channel is not perfect, but it does showcase one thing here. It showcases that we saw, most recent highs. Oopsies. We saw most recent highs in the S&P 500. It made its final move, kind of made a lower high, and then it kind of formed a double bottom almost perfectly. You have that lower bottom and then a higher bottom, and now we're starting to move up again. More than likely, we're going to see positive news come in the next couple of weeks, which is going to push the S&P 500 even higher. Right now, I just got off the phone with somebody actually today, and they were talking about their crypto stocks and how they're looking terrible. Well, right now, I'll be honest, for me, it looks pretty fair in my opinion. We're starting to form a pretty significant bottom on the weekly chart, especially for Bitcoin. Bitcoin's starting to find that bottom right there at 59,000, 58,000, somewhere in that time frame. That's a pretty solid bottom right now. And on the weekly chart, we're seeing the RSI and stochastic RSI being the oversold or very close to the oversold spots, which means, again, hold on to your horses, but typically this just means that we're going to see some upward action, right? You only have so much sell-off pressure before it kind of bottoms, and then it makes its next move up. So, right now is actually, I'm kind of getting excited. I like to see the markets in these positions. But let's break down the weekly briefing here, the briefing for us, and we'll kind of go from there. So best quarter in 6 years as Wall Street is already nervous about July. The S&P 500 and NASDAQ just closed Q2 2026 with the strongest quarterly gain since 2020. Holy cow, it was off. The Dow Jones best quarter since 2022. Now the hard part, can it hold? So the question that you really have to ask is, why is the market doing so well? Well, the market's doing well because of data centers and because of AI. if you look into it, about 20% of the S&P 500 stocks are being held up by tech companies that are working with AI specifically, and data centers are starting to become very popular. Even in North Dakota here, we're seeing, and a partner of mine that I talked to today, he brought up the idea that AI data centers, North Dakota was like the capital of agriculture for a very long time. Like, we have a significant amount of agriculture here. There's a significant amount of farms. Like, you drive through North Dakota, it's flat as hell. There's farmers everywhere, and the population is actually pretty low compared to most states. It's the most affordable state to live in. There's a couple of things we talked about today, but there's, I think, 3 or 4 data centers being proposed in North Dakota, and the reason is because of our harsh winters, right? Our harsh winters, we have basically 3 months of summer, and then it's really freaking cold for 9 months out of the year, right? Or not very very warm. We'll just put it that way. It's not typically freezing, but that in itself is going to be very appealing to data centers because cooling purposes, right? It's a lot less to cool something in the middle of winter when you can just use natural airflow. But anyways, so the main reason that the stock market's holding up is because of the AI world. It does make me a little nervous. It doesn't. How can we say this is going to stay when there's really, I mean, we're still in the building phases. I don't think we're in the maturity phase, and that's where we're going to kind of kick ourselves. Is there has to be a maturity in this new asset or this new technology for us to feel stable. We're kind of in that bubble, in my opinion, where things are just running up because of the headlines, right? Because everybody's saying that AI is going to change the world and optimize how workflow and optimize how productivity works and all that stuff. I don't think it's quite there yet. I've said that multiple times, and I will continue to see it until I see otherwise. But right now, even companies like Ford, they came out publicly. They fired a bunch of their engineers last year, thinking that AI was ready to maintain and take care of all of those, those white collar jobs, and they weren't. They just aren't there yet. The technology isn't there yet, and the data centers, until we have more of those and the infrastructure gets stronger, we're just not quite in the maturity phase. So, anyways, Monday marked the final day of Q2 of 2026, and it was a quietly impressive quarter for the U.S. equities, given that what they were trading through. Excuse me. Despite an active war in Iran, hawkish pivots from the new Fed chair, which, by the way, I don't think was really as hawkish as people are anticipating. But the core inflation running above 3%. Major indexes posted their best quarterly performance in years. The Nasdaq led, powered by AI related and names and chip stocks, like I said. So Monday's session itself was choppy. Stocks were a little changed at open, and investors positioned ahead of the flood of economic data due through the week. Alphabet joined the Dow Jones and industrial average for the first time on Monday, its first session as a component, and climbed on the news. Micron fell after Bloomberg reported its Taiwan office was raided in a probe related to chip smuggling into China. So those of you that don't know, there's been some restrictions, or supposedly some restrictions, where there shouldn't be transferring data chips into China, part of a sanctions kind of operation. But the goods trades deficit widened to 105.8 billion. Oh my God. The goods trade deficit widened 105.8 billion in May. More imports, fewer exports, a number that quietly weighs on GDP math and signals continued consumer demand for foreign goods, even as domestic manufacturing stumbles. May Jolt's job opening are expected to show slight dip to 7.3 million, with an actual release due Monday morning. What does this mean? Its strong quarter is good for stock market, right? But the next 30 days carries 3 major risks that could unwind gains fast, right? The Doha talks collapsing and oil spiking, June jobs data coming in too hot and locking in a September rate hike, or war signaling balance sheet runoff. The rally is real and fragile. So basically what they're saying is, or what it's saying is that we're not exactly to a point of comfortability yet, right? With the new Fed president coming in, I think everybody was very disappointed because they expected that the person who got inaugurated, or who Trump picked to be the new next Fed president, was going to initially come in and just drop interest rates. I think he will, but I think he needs time, right? He didn't really say much to really showcase these hawkish or dovish when it comes to interest rates in the economy. I don't think you can raise interest rates now because it will push us into a recession. We push into a recession. Most people are struggling the way it is. We get to less money flowing through the economy. It's going to be even harder for people to make ends meet. And people are struggling the way it is. I don't think that's an option. It's a very small option. I don't think they're going to drop interest rates because you're going to have inflation, right? They're going to try to create sustainability at current rates. And more than likely, I think September, we're going to see interest rates stay where they are. there's a very slight possibility that interest rates do drop. I don't really think as of now. It could change in the next few months. I don't know. But the data shows right now that we're still seeing higher, double the inflation point they want to be at. We're still not officially ending the war in Iran. And we still have so many other factors. The exporting thing is a big one because when we have less exports, more imports, right? That just drives down economic growth or GDP, right? So we've seen tons of money being promised to build things in the United States, which will create manufacturing jobs, which will create a bigger, exporting, uh, continuous growth in the exporting world. But for now, I always tell people we're kind of in that foundational stage, right? So when you go from a position where you just printed money for so long and you just spit money out and you made it devalued it so much, you just hit the easy button. It takes time to restructure, start a foundation, and then move forward to gain and see actual longevity growth. So I'm guessing, and I'm going to anticipate that the next few years are going to be a little more brutal. But and I hate to say it, but I think 2030 is more than likely going to be that major growth. Like 2030 has been in the books on a lot of different entities, whether it's the the World Health Organization, or you talk about World Economic Forum. You talk about stable coins, things like that. There was legislation that was apparently passing that they couldn't create central bank digital currencies until 2030. I think 2030 is going to be the year that a lot of evolution really happens. Right now, we're in the phase of transitioning from the traditional banking system to the quantum banking system. And that is a whole nother topic in itself. But essentially, we're moving to a time where money moves slow, and then we're transitioning from that time where money moves slow to the new time where money moves at the speed of light. And by able to settle transactions instantaneously, there's a lot of money to be made in that market. But regulation takes a very long time because they need to make sure that these rules that they establish are very, very strongly footprinted, if that makes sense. Meaning that people need to make sure that when or the regulators or whatever, they need to make sure that they're regulating things safely so that when that transition comes, the economy can really grow based off of a strong foundation, right? Like when you're building a house, you don't build a house on twigs and then hope the thing stands up, right? You build a solid concrete foundation. So I think that I think there's more hardship ahead before we see good things. Just because the stock market's doing well does not mean that most people are. I think 97% of, or no, I'm sorry, it was like 75% or something like that, don't invest in the stock market. So relatively 25% of the people are making money and the rest are not, right? I think that's an educational issue. That's a whole nother opinion for another time. But yesterday, today essentially. So let's talk about the Iran war real quick, meeting in Qatar. So essentially, the United States was supposed to meet in Qatar to negotiate more things with Iran, and Iran came out and said, actually, nobody's there. We have no plans to meet with you, which is always tough because the news is very wishy-washy. Holy shit, man, it's really wishy-washy. You look at Iran versus the United States, obviously it's going to be different, but it is two completely different stories, right? So Iran meets Qatar, but still won't meet with the U.S. So Tehran was Tehran will send its delegation to TOA today to discuss the memorandum of understanding with Qatari officials. American negotiators are also in Doha. They will not be in the same room. So it's slightly progressing, right? But more than likely, I don't know. I mean, stuff like this is not really a good thing. They could come out with something and drop a bombshell. I don't know. I think the 4th of July is going to be an interesting one, especially year 250. If I was Iran, I would be holding out till after the fact to try and damper the festivities. But anyway, as of this morning, Iran's foreign ministry confirmed its delegation will meet Qatari officials in Doha today to discuss the implementation of the June 19th memorandum of understanding and a release of Iranian assets, or frozen Iranian assets. There's about $6 billion on the table right now that has been frozen for quite some time for Iran. The United States, it seems again, I'm just looking, I'm topographical view looking in, it seems they're trying to create a team, or trying to create an ally with Iran for the first time since like the 90s. And that's pretty significant. 30 years later, trying to establish some sort of ally-based growth, right? I mean, again, we're moving to a one-world economy, and people don't want to hear that, right? Because that means we're losing our privacies and all that fun stuff. But we're moving to a time where people need to move together. And I think this in itself is a needed situation. I don't think it's great that we're seeing a war, but to make that attempt to actually have an ally present, especially with the amount of oil that produces, people people neglect to realize, like, you have how much, war negatively affects the world. I mean, it's not just immediate positions or immediate economies or those who are directly involved in that war. It's everybody. But anyways, so the U.S. team, Witkoff and Kushner, is already in Doha after the meeting with Qatar's PM or Prime Minister yesterday. The two sides are parallel processing through mediators, not talking directly. That distinction matters. The memorandum of understanding signed in Versailles requires the U.S. to unfreeze Iranian assets, lift sanctions, and allow oil exports, and end the naval blockade, and create a reconstruction fund for Iran. Iran's government sees that as a clear mandate. The U.S. sees it as a framework requiring further negotiation, particularly on the denuclearization, which Trump made his core demand on Monday Oval Office statement. He just put his he posted this on True Social. He said it's very simple. It is the denuclearization of Iran. We don't want them to have a nuclear weapons, and they're not going to have a nuclear weapon. So these deals could halt very, very, very quickly, just because more than likely it is very possible that it's going to be an ego battle to say no, 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 we're not doing this, no, no, we're doing this, you promise this, you promise this, and it's almost like siblings arguing back and forth, right? Basically pointing fingers saying you're the problem, and then they both blow up, and then we're back to square one. That says, meanwhile, an IRGC affiliated commentary published by Far News Agency argued this week that Iran has no choice but to build a nuclear weapon. The agency later distanced itself, calling it an option piece, but the signal was loud enough, and it's been tracked in Washington. A 20-year-old American citizen who was also arrested in Israel on suspicion of spying Iran, adding another irritant to an already complicated diplomatic picture heading into today's parallel talks. The bottom line: this is more ceasefire maintenance than peace deal building. The Doha structure buys time and keeps its oil markets calm, but a formal end to the war requires both sides to agree on things they currently disagree on at the most fundamental level. So it's just saying that we're not at the end of the war yet, but the market's pricing it in, and the market's confident right now that the war is ending. But more than likely, it does. Again, I'm looking from a very biased perspective coming from the United States, but my guess from what I'm seeing is that Iran really doesn't have much capability to stand on. I mean, they're going to negotiate their hearts out, but I mean, if you lose the military dominance, you lose the control over your own trading canals, and on top of that, you're kind of pissing and moaning, saying, "Hey, you're going to do exactly what we tell." It just doesn't seem like there's much to stand on. There was about 40 ships that made it through per day in the Strait of Hormuz now versus the 110 ships that was on average before pre-war. So things are starting to move in a positive note, and that's why you're seeing oil kind of fall off a cliff here. More than likely, we'll see gas prices kind of follow it over the next couple of weeks. But as of right now, I'm still more confident in the fact that we are going to see more downward pressure slightly in the oil market. And then from there, we'll reassess beginning of next week. But I got a feeling over the weekend, we're going to hear some news that's really going to shift things a little bit. So anyways, I hope this brought some clarity, or at least a different perspective for you to kind of internalize and say, this is what's going on. This is why it's going on. It's always open for interpretation, right? Data is only open for interpretation. Is it good? Is it bad? What are the effects? What could happen, right? We're trying to predict a future here. We're not necessarily trying to be 100% correct. I'm always going to use the data that I have to draw in and provide as much capability and understanding as possible. But with that being said, I hope you guys enjoyed the video. If you made it this far, make sure to like and follow, and we will see you in the next video. Cheers. Happy 4th week.